Wake up, buyer payer people. It's a beautiful day. Go grab yourself another cup of joe and say hello to Jim and Michelle Rhoads on the Buy Here Pay Here Morning Show. Take it away, you two.
Morning.
Hey, welcome. Sorry
Happy Friday.
That's on me today being late. I'm just.
Oh,
I
yeah.
didn't
You
allow
remember the joke that you told? What was his name? That was at the dealer forum. It was like,
Yeah.
so I have a choice on being on time or my wife's hair looking really nice. Doesn't her hair look nice?
Sometimes you look fantastic.
So,
That's me.
not me.
I just didn't allow for
not
the
today.
extra time it would take to put on a sweater this morning. So.
Well, I love you in a sweater.
Oh, good.
You
Thank
know
you.
that already. So, so we went yesterday. We have a party. Well, a party.
Celebration.
A celebration. We're those of you who know, my brother passed away. His funeral was a couple weeks ago. Tomorrow is we're doing something in Utah instead of in Idaho, a life celebration. Different family members and friends have been recording little tributes, and so we'll have them playing on the televisions around the thing. So we were at Hobby Lobby and just picking up some stuff for just decorating things because Jim's working on lights, and so he found this. And dear Santa, please stop judging me.
Knock it off already.
Yeah.
With the
so
naughty list
that's these are our new Christmas cups.
Right. For sure. I got mine over here too. So
yeah.
Fun
so
stuff.
And that's a little insight into Jim's sense of humor.
And just follow Ted Lasso's approach instead, Santa. Just be curious.
Just be
not
curious.
Judgmental.
Yes. Actually,
Right.
you should do another, a different mug.
Oh yeah.
Yeah. Oh, last night, just y'all know that we work together, we play together, we just hang out together. And last night we were just chatting about a bunch of different things, and it's like because we get kind of silly sometimes, we came up with a really great concept for a restaurant, and so it was like so much fun, and we just kind of bat back and forth. It's
a winner of an idea.
It's a winner of an idea. So
those of you in the restaurant business, reach out.
It'll be an awful lot of fun. What do we have happening? All of your groups are meeting next week?
No, week after. The data deadline for V8 is Monday.
Okay.
It's our target, I should say.
Okay.
So we're trying to get all data gathered up so we can have those meetings before we get into Christmas week.
Yeah.
And so just know, if you're still out there on the fence with a V8 dealer group, we got some people coming in now.
Oh, yeah.
But we want to get some more. We got some empty seats in a few of those groups.
And we have some stuff that's as we're developing, pricing's changing, but that was part of our conversation, is like developing different tiers of engagement for dealers. And there is some really cool, we're not gonna blurt it all out right now, but there's some really cool things that are going to be happening next year. That just, it's like dealers, it's just going to be such a value add to what it is you're doing.
I think I've shared with you that I'm moving ahead with the first V8 Mastermind meeting in January. So we've got Mastermind suggestion for Mastermind topics coming in from our most recent survey. And so I look forward
to so V8 Masterminds are only available to V8 members.
Right.
And so these are like very specific masterminds where you can get together and talk about a specific kind of topic. And then we also have our beta White Hat Way certification with
I'm calling it a pilot.
Yes. Our pilot for that, and a lot of the things that we're going to be talking about different levels of engagement that dealers can come in, it will be around that.
Right. For the certification course,
for the certification for White Hat Way, and so we're really looking forward to working with our team, because we have a team. I love that. And really getting ready for that. So we've talked enough about what if you're interested in doing V8, let us know.
Please reach out.
Yeah, because if you lock in your position now, you're not going to get in with the new pricing.
Right. There's my phone number. Send me any goofy
903
Christmas memes.
Yeah, 903-816-0216.
Right.
Christmas memes.
Right. And here's the email.
Email is jim@whitehatway.com. Yeah.
Reach out. Let's talk.
Okay, so this is something that that Jim has, he comes up with really interesting ways of breaking apart and dissecting and a different approach, a different view, a different perspective, that is really, really valuable. That's one of the things that through our clients and also through V8, which we kind of consider them our clients too, in a way.
Mm-hmm.
But that as we're working with them and it's like, hey, there's some question around this, and Jim will come up with a tool. So do you want to tell everybody kind of like the background of this tool?
And Michelle's right. It seems like I'm always in my mind as we got windshield time or whatever. I'm thinking about how to better present numbers to dealers, like how to help them better visualize what's really happening in certain areas. And so that's part of what we do over in V8. But this one came up because we've actually had 2 clients in the last couple of weeks who said that we really need to assess our profitability. One of them came up because of their relationship with the lender. The lender was analyzing their profitability and discussing that with them. And so that was kind of front of mind with them. Then another client that we've worked with for a long time said, my CPA is looking at the profitability and would like to meet. So
because I remember you saying that the CPA who and you've worked with this, and this is one of our consulting clients, the CPA reached out to the dealer and Jim and said, hey, there's some stuff that I see from my perspective that it seems different.
I'd like to understand it.
Yeah.
And so with the 3 of us met yesterday virtually, he came into the regularly scheduled meeting with the client and we broke it all down.
And so this year, Jim has worked with this client of ours and their CPA and taught their CPA how to look at buy here, pay here.
Yeah.
So this is the first time, like in a year's end approach, that this CPA is looking at all of the things through a lens of buy here, pay here. And he's like, there's some things that I want to understand.
Well, he's been looking at this dealer's buy here, pay here financials and RFC for years.
Okay.
So what's different this year is that, the CPAs basically asked me, and when we started our meeting yesterday, the CPA asked, I got about 4 questions for you, and went through the questions and I was able to address those. And by the time we wrapped up, he said, thank you. This is very helpful. Meaning, our business is just different. I mean, it's not like we're shoe stores and we buy shoes for $13 and sell them for $25. Or I don't know. Can you still buy shoes for $25? I don't know. But anyway, the point is our business is just different. We tote the note. We have paper or phantom profit. The profit that we generate today, we don't get to spend because it's not in the bank account. It's on the books. But I still find that recently it's just become a conversation. Obviously, in our V8 thing, that we started asking our dealers to remit quarterly. The most recent quarter that was available for operating expenses, so that we can incorporate that in our kind of picture of the operation. And then this comes along. And so I thought, we really ought to help dealers have a quick way to get to, am I profitable? Right. So
is my business profitable?
Right. And in particular, I would say for our conversation today, a couple quick things. This is, first of all, I'll put this on the screen. This is not GAAP accounting that we're talking about. Okay. So we're not CPAs. Right. We're not offering you accounting financials. This is not a P&L that you can, turn around and use to prepare your taxes. This is a tool to give you a quick look at your profitability. And I think one of the things that happened, I told the CPA yesterday, I said, the answer to your 4 questions might be different today than they were a year ago, because in the last year, I've gained some new perspective from just different resources, pulling in information from lots of different places. And I now think about profitability different. So it's part of why I chose to create the tool and help dealers start to differentiate those things and think in this way. So maybe we can just...
Do you want me to bring it up?
Yeah, go ahead.
Okay. So I'm going to bring this up so what I'm hoping that you'll do is that you will look at or explain I'm sure that most dealers out there will, or a lot of dealers out there will like, well, yeah, I totally get this. But, we know that a lot of our listeners are new to buy here, pay here. So
sure. So yeah, I'll go through it in that way. I think, so first of all, maybe it helps to explain that this is an actual dealer's numbers. And so this is the same dealer I was meeting with the CPA yesterday. I just pulled together those numbers and because we had them fresh and the left side is sales. Okay. So we're looking at our profitability. So if you want to think of the sales department as sort of the front end department of your business, some people use that terminology in the retail space, especially. But if you think about it as front end sales, and on the right side, I have more portfolio financial, finance company numbers. Okay. So obviously we're going to bring those things back together globally and look at just globally, are we profitable? Because like I say, ours is just more complex. The profit that we have, we don't have it in cash. So it's just a whole different animal. But I think we still have to examine our profitability. And why is that important? Because if we may be moving more cash than we were last month and last year, but if there's not enough profit in it, if there's not enough markup, we're just moving money. We're not gaining.
Yeah. And so, this is, what I'm hearing from you is that this is just a really good view, which it will change on a monthly,
right.
There are some months and this is actually a period. It's April to November, and you can break this down by the month
choose whatever
too.
Period.
Yeah. And that it's just kind of give you an idea about where money is coming in and coming out. And, we talk about data when you can start really looking at it and dissecting it and all of that, then it has much deeper meaning. So this is just like the very first view of the thing.
That's right.
And it can change. Like you said, this is a period. This is a 8-month period, April to November.
Yeah.
And and just kind of see and start just to look at things and overlay years. And it's like, when is my least profitable month of the year?
But
or whatever.
Let me just think about that.
Okay.
When you say the least profitable month in our buy here, pay here business, is paper profit. So even if we made profit today in this month, it still is it. You have to kind of think of our business in an aggregated or portfolio basis. And that's kind of why I chose to do a little longer period of time here, because on any given month, we'd be up and down.
So let me ask you this, because, you're talking to the accountant, and this was kind of pulled together to give an accountant a view and the dealer a view. So is this like the global profit loss in the period? Is this your business's taxable earnings?
It's close. I mean, that's why I say we're not doing GAAP accounting here. There's stuff over here that's not included. Like, if you started looking at things like EBITDA, right? It's earnings before interest and taxes and depreciation and amortization. Okay. So that is a lot of stuff that accountants would do that will ultimately impact your ultimate P&Ls that aren't represented here. I'm just trying to give dealers from a quick operational look. If I want to just grab a few numbers, when I first put this together, I was calling it my profitability 5 square. Like, it's just kind of a way to just, those yellow fields are the ones that dealers would input. And so now when you put those just 5 numbers there, right? And so you put those numbers in, you could even just go net charge-offs and go straight to that, and you'd have fewer numbers to do. But I just kind of did the calculation for folks. So this is just, and I would urge dealers who are doing both retail and buy here, pay here to do the best they can to examine the profitability of their buy here, pay here division or department by itself. Okay. So to do that, you're going to have to kind of know how much of these expenses that are reported as operating expenses belong to buy here, pay here, which is our V8 dealers have a challenge with that.
Well, absolutely. And we've worked with enough dealers that it's, we had a dealer a few years back that was like, they weren't being profitable. And so they had to go back in, and it's when you look at something like, it's, oh my goodness. And it's so easy as a dealer, you get so busy in the day to day and all of that. So you're not looking at these kind of things until sometimes it's like, oh no.
Sure.
What? Oh no.
Well, I don't even think, like, I really think this is part of, that this is my approach to things anyway. Even though we're looking at an 8-month period, these are 36, 42-month contracts. So when we say, oh no, it's like we don't have to be super reactive here when it comes to profitability. Of course, we need to make sure we can check periodically and make sure we have enough profit, because this left side, let's just focus on this left side for a minute. That gross profit from sales, which I could say that's just BHPH sales, that's gross profit, that's markup. Okay. And so that's what you see on line 5 there. And then row 7 is operating expenses. Now, one of the things that's challenging for most dealers, I'm working with a dealer right now that all they have for expenses is 2023. So they couldn't produce this because they don't know off the top of their head, or they can't run a report quickly to be able to know what their expenses are running.
And that's it's one of the really beautiful things that 20 groups have brought to dealers is to be looking at that and then folding in those kind of numbers into as they're looking at the numbers for their business. Is that operating expenses they're a big part of it.
They absolutely are. I mean, that's just a real expense. We can't hide from it. These are, these are direct operating expenses that, we've got here. And so this dealer, dealers might look at this and ask, does this include interest expense with a lender? And the answer is yes. In this case, it does. There are, and so we need to know that.
So that would be under operating expenses,
correct.
Right? Okay,
yeah. And so a lot of dealers would separate that.
Now, one of the things, like if you can, this is I think from my perspective, and so please correct me if I'm wrong, is it's a great way to just have a quick snapshot of like, where are we in a grand scheme, more it's aggregate and all of that. And I think back on that dealer I was going into that there became an oh shit moment, an oh no moment where it's like, uh-oh. And then as they were doing, it's just conversation, as they were looking at their business themselves, it's like, oh, their operating expenses, we know when they looked like just at salaries, it's like they had this kid on this and this kid on this and their mother-in-law on this and them on this and all of these kind of things. And it was because they were having a thinner time of just their regular operations. It's like all of a sudden it's like, oh no. And so there's a lot of, tightening belts and trimming things off and saying, listen, I love you, child. You're on your own. And like getting things back. But it was kind of this kind of view is maybe not in this exact format, but it was just, this is that I'm wondering with that dealer, if this had been something that be looking at on a monthly or a quarterly or an annually basis, if the oh no moment would have been staved off.
I think this one's a good one to look at quarterly. Okay. Like quarterly feels right for me here, because we know from working with V8 numbers and dealers for years that any given month can be up and down. You can have a heavy charge off month and it'll look different in the finance side, and you can have a slow sales month and that but again, the thing that we have in Buy Here Pay Here, because of the long term of contract, if we don't sell cars this month, we're still enjoying the cash flow off of the last 3 years of sales, roughly, right? Yeah. And so that's what makes our business different. And so we might feel fine. We're sitting there saying, well, our bank accounts are flush, so we must be doing okay. Well, yeah, we are. And if we have a little dip in sales this month, it doesn't kill us. So if we look at it quarterly, I think is appropriate. If you look at something like this quarterly, then I think it's a valid snapshot. That's all it's meant to be, is a quick snapshot.
You're always doing 3 months running average. 3 months running average. 3 months at running
6
average.
Months, but this one is this one's a good one at 3 months, because I think when you look at across a quarter, I think any of us would want to be profitable. So let's go. Okay. So let me.
I have a question really quick. And this is through Facebook from Mike Demaria. Since I do both Buy Here, Pay Here and retail, could I just take my percentage of sales of Buy Here, Pay Here and put the same percentage on my expenses?
You definitely could, Mike. I think one of the things I would be recommending is, in addition to that, if you could arrive at some sort of formula that you may have to update from time to time, but that basically better reflects your expenses in support of those separate things. In other words, when you do a straight line percentage, that might not be the best method because you have collections expense over in the buy here, pay here side that you don't have in the sales side. So to charge a percentage of that to your retail business may not be exactly
but
appropriate.
Sales I could see, collections maybe not, reconditioning maybe not.
So
depends on a lot of things.
It's challenging. Listen, it's hard for any of our dealers to do it, but I think anytime when I pay rent, how much of my rent should really be assigned to buy here, pay here, and how much to retail? Well, it's our choice, right? It's how we want to delegate.
But I mean, I think what he's wanting to be able to do is that if I were to segregate the buy here, pay here, and want to look at it in its profitability, when you're doing both, how would you do that? One other thing that I do, and I hope that answered your question. Mike,
I got more information.
You got more information.
Yeah.
And I wanted to it's something we were talking about this morning. This is not the same for lease here, pay here.
Yeah.
So this is for those that are in buy here, pay here.
Yeah. And I look forward to getting with our friends at LHPH Capital and have them run through this with me, and maybe we can create something similar. In my quick thought about it, most of the things would be relevant in terms of profitability. But profit is calculated a little differently in leasing. And so I think we'd want to make sure when we're really giving them a representation, I think it'd be better to just use this one for buy here, pay here in this approach. And we can make this tool available eventually, but it's like right now, I would say this is not a hard thing for you to be able to create. You could do this on a napkin and go do the math real quick because all we're really talking about is, let's again recap for those who aren't seeing the screen, who'll be listening to this on audio. On the left side of the screen, we just have row 5, gross profit from sales. So in this case, it's $663,000 is gross profit from sales in that period. This dealer's doing volume in the 15 to 17 range. Then operating expenses in the period were $695,000. So that means the dealer is negative $32,000 in the sales department in that period of time. Okay. Just pure and simple. I mean, we haven't created as much profit in that 8-month period as we've created in expenses. So even though that profit is just paper, we can't spend any of it. They didn't use any of that 663 to pay this expense. Like that's the big challenge when people are new to buy here, pay here.
The interesting thing is operating expenses are not phantom. They're real costs.
Yeah, it's true.
Yeah. The gross profit sales in that period does have phantom profit in it.
Yeah.
And so, it
does. And that's the part of what becomes challenging about our business is that it's just different. It's a different animal.
Yeah.
And because it's even if you were just financing it for 12 months and all of this profit that we booked was collected inside of 12 months, it would be a little bit easier. But in this case, that's sort of spread across, the portfolio is collected out over 24 and 36 months. And so it just becomes challenging. And so I think this is why I'm a cash flow guy first, because I always make the joke about I can't pay my techs or my team on Friday with some contracts. Like I can't, we need cash, right? So same thing with paying my lender or anybody else. It takes cash. So I'm looking, you're very careful at cash flow.
I get it. So the left-hand side is gross profit, sales in the period minus the operating expenses within that period, excluding charge-offs. And it comes up with, this minus this is this.
Yeah.
And then on the right-hand side, this is more about your collections.
It is. It's a finance department.
So if we think
of the left side as being sales department, now we go over and look at the finance department side. And this is obviously the portfolio management side of our business. And so now I think interest coverage is the big thing. If you look at that down there on row 94, interest coverage is what we're trying to get to. Why? Because that's the first indication of your profitability in your finance department. Is your interest that you're bringing in this case across 8 months, is the interest that we have collected. This is cash. This is money in the bank. Is the money that we collected in interest sufficient to cover the net charge-off losses? Okay?
And love it. So you're starting with your gross on this side. You're starting with your gross charge-offs,
right?
And you're adding or you're subtracting the value of the repos.
Correct. So that's what you would give you a net charge-off. So I might just clarify, because some people on certain systems, and we just sent out a bunch of instructions for people on a software I won't name, but you have to be able to add. So you have to be careful, because in a lot of systems, you have to add the value of repos recovered to what it's showing for a charge-off number, because it's giving you a net charge-off number. What you really charged off was that gross. Now you could you could just report the net charge-off number. That's all we're trying to get to. Gross charge-off, which means the principal balance of the accounts at the time they were charged off.
The principal balance of the account says at the time that they were charged off,
regardless of whether you got a repo back or not. Okay, so that's how much money left the portfolio. Okay, so think of it that way. That's how much leaves the portfolio when we do our charge off, and then we add back as a credit, so to speak, the value of the repos recovered. So that number gives us, in this case, let me read the numbers for those not seeing the screen. The gross charge offs are 521,000. The value of repo recovers about 144,000. So we end up with about difference of 377 for net charge offs.
Okay, so 377 loss. And net charge-offs. And then you drop down to the next line, and then you're going to add what actual interest income did you experience during that period.
And that would be in the bank. That would be collected. So you're reporting interest income collected.
Yeah.
And in this case, that came out to 472,000 for this dealer. So the finance department actually had a profit. If you want to think, just a real simple look at a profit. This is by the way, when we talk about global expenses over there on the left side, we've charged all the global expenses to the sales side. And so that's fine. And as long as we realize that's what we're doing, we don't need to go the trouble to split it out, because we're just looking at the thing globally in the end anyway. But so what we do is we add our interest income and we say, okay, our interest coverage was a positive almost 95,000 in that 8-month period.
And so then you take those two numbers, the one which was your sales,
it was a $32,000
loser, and then combine it with the collections, and then that gives you just a real good view of how am I doing in my profitability.
So another thing to think about here, if that number had been negative, and I'll show you, let's just quickly.
And I'm just going to say, those of you who there's a lot we're talking through, those who listen to the audio podcasts on all of our syndicated stations, go to YouTube. YouTube, it's Jim and Michelle Rhoads at octane.group, and then you can actually see the thing. So if there's anything that you're not picking up, bookmark this podcast and then go back to YouTube and see and watch it there.
And so I would just say that I changed that number, by the way, from 472 or whatever the number was, to drop the interest income to 350, just to show, because here's why I would ask you to think about from a profitability standpoint. If my interest coverage is not covering my net charge-off losses, then that expense has to hit my P&L, which means now you could, just in a simple way to think about it, now my sales company has to pay it because my finance company can't cover it. It didn't cover it in that period of time, right? And so now that expense, because I'm just trying to simplify the idea that, granted, in accounting standpoint, these gross charge-offs would be listed as an expense in the section of the profit and loss report, but I'm trying to just roll them over here and say, let's analyze our finance company. Let's look at, is our interest covering our net charge-off losses? And if it is, wonderful. I'll go back to where the number was. That's great. It makes us globally profitable. If we're not covering that, then anything we were deficient there would have to get charged to the company globally as an expense, and it'll hit our profitability.
I'm wondering, Darla Boer, who is North Carolina?
She's South Carolina.
South Carolina dealer. She's on the NIAD board. We were having a conversation with her a while ago, and she has a formula as to whether or not I can, it's like I can, my ratios are in a good position. And I think that this kind of, it's a tie kind of to what you're doing here. Whereas she says, if you triple your loss,
I don't remember.
It was like
you're on your own here.
Darla, if you're listening, it was something along the lines of like, if you triple this and you're still in the positive, you're good.
Okay, let me think about that.
Do you remember that?
It was double or triple your charge-offs.
Double or triple your charge-offs. If you double your charge-offs and you're still profitable, then your ratios for are good, and that can and the point of that was with Darla is that it can see you through the rougher times, that you're going to be fine. And this also, that kind of thing too, along with this, that's something that if you have a lender in the picture, that they're going to want to know that you're not leveraged.
Sure.
And based on what you're collecting and all of those kind of things.
Yeah. Well, there's over leverage, and then there's just pure profitability.
Yeah.
I mean, if you're not profitable, then in a real simple way to say it, if you're not profitable, then you're depleting your assets. You know?
Yeah.
I mean, those losses have to come from somewhere, and they normally are going to come from the portfolio or the bank account or inventory. I mean, there's going to get, you're going to erode your assets and your profits, your equity, as you start to suffer losses. And that's going to be true paper losses too on your charge-offs. So, this is why it's just challenging. And this is part of why I work all the time to try to help dealers figure out, that there's profit and there's cash flow in our business. They're not the same thing. But just like going back to my example here, that 663 that the dealer shows in profit, it's on paper. They haven't collected perhaps any of it yet. I mean, obviously it depends on the timing and when,
I mean,
when they get cash positive.
Yes. So it's like what's on your portfolio. And so that collections one, that's like real. That's real money coming in and out and all of that. The other side is that's where all that phantom profit or that phantom is sitting is on the sales side.
Yeah.
Right.
Yeah. And you could say that gross charge-off number of 521 that we show on there, that's not real cash. That's coming off of our portfolio, which is what we're doing today is we're examining our profitability. It's an expense. It gets written off of our business because we're writing it off of our portfolio. It leaves our business assets. So we're writing it off.
Yeah.
And so it's not cash, but it does. And what we're talking about today is profitability. So, but it does hit our profitability.
It's interesting too. This is a really great tool to look at. If I can move the needle by 3% in my gross charge-offs, this is what it will mean to me.
Yeah.
And so like, what does 3%? It's like, I'm saving 1 or 2 accounts a month.
Yeah.
And how that hits your bottom line. In something like this. Yeah.
So I think, most any dealer can run to their software and produce this interest coverage number. Like just go look at it for the last quarter or all of this year, whatever that. So you can get to that number. And now if you're covering on that side, you're positive or just usually looking for about a break even over there. But if you're positive, wonderful. And then you can now you come back to the sales side and you say, okay, if I'm this dealer and I can say my profit from sales did not cover my operating expenses, then what has to happen? I got basically 3 things I can do.
There are 3 levers to fiddle with.
I can increase volume of sales, right?
Which is what most dealers think, that they're just going to sell themselves out of a problem.
And the more this dealer sells, the more cash is going to take out of their bank account or draw on their line of credit. So that, that's another factor. But if you're just looking at how do I make my sales department profitable, there's a very few things that we do here. You're going to increase volume. You're going to increase markup per unit, right? Which may not be a lot of place to go there, or you're going to cut expenses. Like it's just kind of that simple. So I'm just saying, if you want to really simplify the way you look at it, it's like if my interest income is covering my net charge-off losses, that's what it's supposed to do. The portfolio is kind of sustaining itself, standing on its own. And now that we just look at the sales side. And of course, again, I've got all the expenses of the operation being absorbed by the sales department over here. But that's because I'm choosing to kind of look at a financial, thing on my portfolio and just say, I'm looking at interest coverage over there on the portfolio side. Obviously, I could have operating expenses in the, if I have an RFC, I would have operating expenses over on the RFC side. But I'm just bringing it all back together globally and just saying, if we think about it from the sales standpoint, the sales really need to support the overhead. So that's why 20 groups for years have looked at operating expense per unit sold.
Oh, yeah.
So if you have that number, so one of the things we talked about with the CPA yesterday, when we have that number, then we can just say our operating expense per unit sold is X. Our profit, our markup per unit sold is Y. How do those two compare? Right?
Yeah.
This is another way to look at the same thing. But
I love it. Every little bit that you can give a dealer into understanding and having a different insight in
and simplify.
Simplify
because they're busy.
Yeah. Oh,
they don't get enough time at their desk. So this is why I like to try to make life simpler. I'm a former dealer. I get it. It's challenging. You're over there and you're getting a call. Your manager's saying, hey, we got a customer unhappy because they got an engine problem. And then you got somebody else calling on the other line saying, hey, we need payroll turned in over here, And so, it's just busy for a dealer. They got a lot of irons. And so I think anything we can do to help simplify their life and get simple numbers in front of them so they can get a better feel for the health of their business. That's really what we talked about yesterday.
Absolutely.
With CPA. Yeah.
Absolutely. Awesome. Great conversation. He's always coming up with a new tool of some kind.
Like it.
And as 2025 moves forward, you're going to see a lot of those kind of things in a very different way.
Yeah.
And really, really excited about the things that we have on our roadmap for the next year. And so again, being involved in V8 right now, you're going to have access to a lot of these new things like people that sign up in January won't.
Okay.
So get involved now. There are, we have seats available in all sizes of dealerships, but you get to kind of be part of this. We're testing things out and we're working some of these pieces out. And that's one of the things that we've been doing with the groups that we've had this year is giving them a little bit extra attention, a little bit extra, because they're
creating
just
new ways to look at the stuff.
Hey, everybody, have a great day. Thanks again for joining, and we'll see you on Wednesday. Thanks.